I don't even know what to make of crew.
Well, that was a sigh.
That was a Mike sigh.
Come on, man.
That was a Mike sigh for sure.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded July 14th, 2017. It's the Money Path Podcast with your hosts, Bob Iacino and Mike Arnold, founders of Path Trading Partners. On episode 80, The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with the conversation of news and the markets.
We got good bank earnings, which we'll discuss.
Well, well, they just came out. Do you want to hit them now because they're not in any show notes because they just came out? But the banks are down on them, or at least Wells is and JP.
Yeah, I know JP is down in part because they beat by a lot, but part of it was the de-accruing or unaccruing or release of the funds that they had put aside for litigation. So they settled the majority of their big cases and they released that money back into their profits. So that's part of why they beat. Wells disappointed in loan growth really badly. So I don't have the actual numbers in front of me. I can get them obviously, but Wells was a loan growth problem. They had very poor loan growth compared to their peers. And you also have none of the banks really made good money trading, which is kind of a good thing. They did a lot better in traditional banking, so lending. And part of that problem comes in with the data we saw today. So while they beat on this is the complicated thing about banking stocks, is as of yesterday, financials were again, had reclaimed the best performer sector-wise for the year. Financials have become the best performer for the year, beating technology, consumer staples, basic materials, everything. But now we have yields falling again. So if you were to extrapolate that out, because we're always trading where the stock's going to be, not where it is, you take lower yields and you have less profit from lending. So we had spikes in yield over the last month, especially last week, globally. And now U.S. yields are falling. We broke 2.29 on the 10-year. I don't know where we're at now. I could check that as well. But when you see the 10-year note falling in yield, rising in price, that's going to take away future bank earnings. So we're trading on where the stock's going to be in the future. And if yields continue to fall, the bank stock's going to be lower.
And all right. Well, Citi did second quarter earnings per share 128 versus expected 121, revenue 17.9 billion versus expectations of 17.5. Wells Fargo came in at adjusted earnings per share.
There we go.
107 versus 101 expectations. Revenues, which you can't really hide, is 12.17 billion versus expectations of 12.46. So they beat on adjusted and they missed on revenue.
Right.
What I don't see, where's JP Morgan?
You have to think that while you're looking for JP Morgan, you have to think that the poor loan growth with Wells Fargo had a lot to do with that scandal, right?
Yep. And okay, here's JP Morgan, second quarter earnings per share 182 versus expectations of 157. Net revenue 26.41 versus 25.11 billion. So they missed on revenue. So that's the big thing.
Mm-hmm. And we still, if you look at like a 10-year note yield chart, I'm looking here like at right now at a daily chart going back to about March 6th, that down downward sloping trend line is after a redraw is back in place, even though we got a spike in yields last week. I mean, when you think we were all the way up, and this doesn't seem like a lot, but July 11th and July 7th, we had 2.387 on the 10-year note yield. And as of right now, we're back down to about 2.296 is where we last traded. So yields, again, are falling when it actually looked like they might be ready to break out.
Yep. Well, we've triggered that huge double bottom. Remember weeks ago, and it essentially ran up to the stop reduction point. So, but it's still a viable trade. This it dipped back into the formation, the double bottom formation, but now it's back above where it triggered. So
nice.
It's just because it's going to play out long. So it hasn't been stopped out. It pulled back into it, and now it's rallied back up to where you at a price you could get in it again. So it's sort of interesting with that yield. Now the bonds, which also triggered a horrible sloppy double bottom, which is not the one I'm following. I'm following the one on the notes. Also rallied up to its stop reduction one and dipped back into the formation and still not above the peak again. So that's the bonds. But I put more value on the notes.
Agreed.
You know what I don't put any value on?
Snap.
Snapchat.
We got to talk Blue Apron too, but go ahead.
Yeah, but this is interesting because I would be careful that we could get some of these short squeezes. This is through Ihor Duzanis. I need you to pronounce the names. I can't do it.
That's a Winnie the Pooh character.
Where's the name? Where
Igor.
No, it's Ihor Duzanis.
Hang on, I'm finding it. Oh, that's Duzanuski. That's how you would say that.
Duzanuski. All right, 28% of the float that is currently short, according to Duzanuski at S3 Partners. This is fascinating. Investors are paying 50 to 60% fee on their total notional short positions or the total borrowed on an annualized basis to short the stock. That is astronomical. Most, on easy to borrow stocks, you pay about 0.5% to maybe 1%. People are paying 50 to 60% annualized to short the stock. And Newski also said, if I shorted Snap today, it'd have to drop by $1 by the end of the month to break even, meaning on your carry charges.
Wow.
He also said it's not the shorts that are driving the price of Snap down, which we talk about a lot. It's the longs selling their position, that's one of the reasons it's in the show notes, because it's one of the things you talk about all the times. What makes it go down? Not the shorts. They always blame on the shorts. The shorts are driving it lower. No, it's the longs liquidating.
That's pathetic when they do. I hate when they do that.
Do you think any of these insiders actually use Snap? They have a Snap account? I would love to see these guys' Snap account. Here's my $9,000 briefcase.
They put a smiley clown face on their $9,000 briefcase. Look at the new Italian suit I just got, and they have devil horns on and everything else.
Okay, the new rule, if you're a VC in social media, you must be a master at the platform.
There was some talk of some CEOs using Snap to do their conference calls after earnings. Can you imagine Jamie Dimon doing a Snapchat conference call? I mean, that was the talk. Is that some of the modern CEOs, that's how they were going to do, instead of going to Twitter, they were going to be making announcements on their Snap.
I want to see them do live stream the earnings thing on Periscope. They're holding their little phone and they're like, and our earnings.
All these hearts are going up on the screen.
Yeah, the hearts are flying up like they report good earnings and the hearts start bubbling up.
But that was non-GAAP, people.
That might actually move Snap stock.
That might. So I wonder if Snapchat, for the next quarter earnings, are going to snap it out or broadcast it live.
That'd be good.
Is it true that Snap is going to change their name to Photomat?
Photomat, did you say?
For anybody under the age of 35, I'm sorry for that reference.
Yeah, most people don't know what a photomat is anymore because any remaining photomats turned into drive-up coffee shops like these.
Truth.
No,
Right?
digital cameras were invented. That's the problem.
Yeah, and then all the places that used to be photo marts, with the I wonder that's why we have a teenage unemployment problem, because all those the guys who used to work at photo marts and go through everybody's photos don't have anywhere to work now.
Photomat.
Oh, the young people. That sounds so horrible. But there are many people who have new jobs, in Twitch and, YouTube and things like that. So many new jobs have been created in the new digital economy.
Yes, they have. What did you want to touch on before we get to before we always have to do our Amazon roundup? What did you want to talk about with Blue Apron?
Blue Apron fell below their IPO price this week. And it just it's being called an absolute bust.
Well, it traded down to 708 this week.
Yeah, I mean, if you do the percentages on that, it's 30% below its IPO price. That is horrendous.
And what's it below its high?
Oh, God, I don't know. What was its high? 11?
Yeah, Mr. Calculator Boy.
Oh, hang on. I'll get it. Where is it right now?
It's trading right now 732.
732?
The stock
and its high was 11?
Kale.
Stock is at the high was 11?
Yep.
33.5%.
And to the low, I want to know to the low when it traded at 708. So is that like 35%? What, did you pack it up? You put it in your briefcase, didn't you?
I put it in my hard briefcase. I don't have a soft one. I have a hard one with clicky buttons on it. All right, was this 7 what?
708.
Oh, 8. That would be 35.5%.
See, I was close. That's a bit. I wonder if Blue Apron, it has to be in the top 10 worst performing IPOs ever.
Yeah, that's bad. I mean, bear market territory within a month of its IPO.
No, that's worse than bear market territory. If you take a 33% decline, you need like a 50% rally to get your money back. I mean, right? So it needs to move up 50% from here. Oh.
This is why certain rules, I mean, everybody people, well, whatever. I was going to say something I don't want to say anymore, but this is why there's rules that the founders and the people have to hold the stock. That they can't just go IPO and sell their stock out and continue to work there.
Else it'd be at 2. I think a sell-side analyst just came out and said it's worth 2 this week. It's 2. Oh, that hurts.
There's a going to zero segment in this show. Maybe it's got some room.
Might have some room for an addition.
Yeah, I think that might be on the new list of possibly going to zero. And that I don't see it being acquired by anybody. So that one, although, maybe if it gets low enough, Amazon will just buy it out of pity.
Yeah, ladies and gentlemen, the going to zero segment is sarcasm. So take that with a grain of salt.
Although Amazon could pay zero for that.
Amazon, if the stock drops low enough, Amazon could just toss them a couple bucks and, hey, we got a delivery service.
They could.
Because now Amazon Prime households are on track to exceed cable TV subscribers in the U.S. by the next year.
It's awesome.
So according to Morningstar, nearly 7.9 million U.S. households now have Amazon Prime membership, up from 66 million at the end of last year. That compares to 90 million U.S. households that will pay for cable or satellite TV. So they're within 11 million of that. And based off the rate of their growing, so in the half a year, they've already added 13 million. So by the end of this year, if they add another 13, they'll be at 92 versus 90 for the cable TV and satellite industry. And that's not accounting for people actually canceling their cable subscriptions, which I think you did, and now you're a streamer.
I did. I'm a streamer.
You're a streamer.
I watch business news on my phone, since there's no one that allows it to be cast yet.
And you were worried about that. You were worried about business news. You found a solution.
Business news is what I was worried about. And to be honest, I mean, I I'm like in a tinfoil hat screaming at them all the time, "You're liars!" And I'm one of the guys on there. I'm on the shows and I hear them talking. I'm like, "That was useless." I scream at my phone.
Do you ever watch a playback of you and scream at you?
Yeah, I scream at myself for screwing things up. Yeah. I swear to God, man, I can make something that I didn't want to say sound so good. And that's how I end up getting, like, people shouldn't watch business news. They really shouldn't.
You've gotten really good, Bob on air. You've gotten really good, I do have to say. Yeah,
I mean,
you
honestly,
have refined it.
Thank you. I appreciate it. But nobody should watch it.
I got a great tie-in for that on-air line.
What do you got? Do it.
Amazon Prime air cargo planes are ready for takeoff. That's sort of like on air, right?
It's very much like on air.
Look at that. So last Friday, this was after our podcast was over last Friday, so we're putting it in this Friday. Amazon unveiled the first Boeing 767 of its new fleet of branded cargo planes at Seattle's Seafair Air Show. Mm-hmm. They're going to have, let's see, this is one of 40 planes Amazon has agreed to lease from Atlas Air and another partner, ATSG. They're currently using 11 of the cargo jets, but they're going to roll out more planes for the fleet later this year. So now you have the Amazon Air. Now who said this? Clark, what was his first name? Dave Clark, Amazon Senior Vice President of Worldwide Operations. It outlined also more plans for their expansive air transportation network. The company is looking for more efficient ways to meet the large volume of deliveries it has daily, while also cutting down on delivery times across the country. Quote, creating an air transportation network is expanding our capacity to ensure great delivery speeds for our Prime members for years to come. I cannot imagine a better way to celebrate the inaugural flight than in our hometown of Seafair, along with Amazon employees and Seattle residents. It would seem controlling its own logistics instead of relying on either FedEx or UPS is one way Amazon plans to achieve its delivery goals. But they also stress that they're not cutting out US and FedEx altogether yet.
Yeah, but UPS and FedEx should be looking in the rearview mirror because there's competition coming up fast.
Right.
Yep.
It was part of the reason that the transports have been so strong as of late, and those stocks have done really, really well versus what they might have been doing in the past because of Amazon, because there's so many people getting comfortable with getting things shipped. And now Amazon is like, yeah, I think we'll ship our own.
Yep. Did I put that in for a later?
Ironic, don't you think?
There was Walmart now. This is not in the show notes, but Walmart came out, and we've talked about them, putting pressure on the competitors, the trucking companies. They only want, if they're doing business with Amazon, they can't do it with Walmart. Now Walmart's putting more pressure on with this real-time delivery, which they're stepping up the fines if you deliver late or even a day early. They're fining the delivery companies, meaning to taking the stuff to their warehouse, because they're starting to get so they actually don't have the storage space to process all these goods, and they want it so real-time delivery that if you're a truck company and you deliver your haul to them even a day early, you get docked. So you have to be there right as the schedule. Like, all right, you say you're going to be there on the 16th, then you better pull up on the 16th. You don't pull up on the 15th. You don't pull up on the 17th. You're there on the 16th, or you're getting docked.
Wow.
So they're really trying to fine tune everything, and this is also cost savings with not wanting people to. They're trying to get every little last penny of savings out of this real-time delivery and their whole operations and infrastructure. So that's how they're looking to have to compete with Amazon.
Wow.
Yeah. Wow.
That's crazy.
Now,
there's just such irony in this stuff to me. It's like, again, talking about the shipping thing, you get so much of your growth driven by a company that or by a company that creates a culture. right? I would say it's pretty easy to say that Amazon created the culture where people decided they were okay with pretty much everything being shipped, even fresh food. Blue Apron, terrible stock, but even like food, right? Now people get food shipped, and you had all those grocery deliveries, Peapod and the likes. At least around here, it was Peapod, that I don't think do that well because Amazon can deliver so much of it. And the shipping companies, the UPSs, their stocks did so well, and they made so much money because of this culture being created. And then you end up with a situation like Walmart, where, I mean, the pressure that's going to put on human trucking, like human truck drivers. I mean, if there's a car accident and a road is closed, the road is closed, right? So now that trucker's got to find a different route and maybe drive through a time when he might have slept so that he doesn't get docked. And what does that then lead to? Autonomous driving.
Yeah, well, yes, it does. Well, we could go there now, or we could go there later with autonomous driving.
Whatever you want to do, bud.
Well, let's see. Let's go there now, because that's then we'll jump back to some other stuff. But talking about autonomous driving, Audi introduces its semi-autonomous A8. The 2019 is the first production car with level 3 autonomy. Mm-hmm. Now, for people who don't know, level 0 is considered you're doing everything.
Okay.
Then you get into some of this adaptive cruise controls, which can be a level 2, that automatically brakes you. The lane departure stuff is level 2. Level 3 takes it another level. The car takes care of acceleration, steering, braking, and starting from a dead stop, and does so without driver having to pay attention up to 37 miles per hour.
Wow.
Audi notes that drivers can take their hands off the steering wheel permanently and, depending on the national laws, focus on a different activity that is supported by the car, such as watching onboard TV. The driver can't completely check out, though. If the car determines it can no longer safely drive on its own, the human will have to take over. That means no naps. So that's no naps. You can't sleep. But that's it. That's coming out in their 2019 model. That's how much it's already there.
Wow.
And then a level 4 is slightly beyond that. Level 5 is full autonomous, where you pretty much don't do anything, meaning there is no steering wheel in the car pretty much. It's like, get in, tell it where you want to go, and you don't get to operate anything.
And level 6 is accurate kangaroo analysis for safety.
No, that's level 4. That's actually, once you master the kangaroos, you've achieved level 4.
Did anyone see the video of the kangaroos going back to the Volvo that they can't predict them? And did you watch those kangaroos fight?
No, I didn't.
Oh, they use their tails. It's on the Twitter page.
Yeah.
I'll probably cut this whole piece out, but.
And then in this autonomous, and this ties into exactly what you were talking about, the N-Ride with Amazon and the truckers and everything else. N-Ride launches full prototype T-Pod. This is so cool. It's a startup based in Sweden. They have a full-scale prototype of the T-Pod. What's a T-Pod? A T-Pod is a driverless, fully electric vehicle with a range of 200 kilometers and designed to replace smaller, medium-duty trucks on short trips. Where N-Ride T-Pod differs from other autonomous electric trucks is that it can be driven by remote control. So the deal is T-Pods will travel autonomously on highways, which means nobody needs to do anything. They just go on the highways themselves. Then when they enter cities and towns, a driver will take over by remote control and guide the T-Pod to its final destination. And even when they're going autonomously, if they have a problem or something else, they can kick into a driver, and the driver will go through a video screen and take over driving of the truck. So the drivers are all in like these facilities that are in a central location, and these T-Pods, which are driving down the highways together in packs, and then they get to the city and they break up, and then the video pops up in the driver screens, and the driver's like, okay, I need to drive it here, and they take over. These things that literally have no way you can drive it in the truck itself. It has no seat or steering wheel. It just has a video camera and all the autonomous features.
Why do I see a bunch of like drunk truck drivers in a room swerving around traffic laughing?
It will have Asimov's robotic 3 laws. I'm going to need some help with it, Mike. 1, get me a fresh coffee. 2, shut up. 3, go to work.
So
I just imagine these guys play.
Yes, do no harm.
Do no harm.
Get me coffee. Yeah, I like that. Get me espresso.
Give me an espresso.
So
Asimov's 3 law. A robot may not injure a human being or through inaction allow a human being to come to harm. A robot must obey orders given by human beings except where such orders would conflict with the first law. A robot must protect its own existence as long as such protection does not conflict with the first or the second law. There you go.
These trucks are going to need those 3 laws.
Yeah, for sure, right?
Look how fast stuff is.
I know. That is a cool looking truck, by the way.
Yeah, it's they have them in prototype now, and
I mean, you fit a ton of stuff in there.
Yeah, it's like a storage container with wheels. It's sort of just here's your storage container
with like a jackalope on the front.
There's like a Japanese Gungan fighter plane robot inside there.
So that's the T-Pod news. Now, what you had this on there, Stafford. Apple unveils smart home experiences in its retail stores.
Yes, I guess Apple retail stores, they're doing a test run. What is it, 14 it says there or something? But they need to get into this home automation market. They have all the software. Philips makes lights that change colors, but the adoption's been very poor. So Apple is trying to be able to provide solid demos inside their stores so they can move some product.
Interesting. I think it's 46 of its retail stores worldwide. So they're going into this whole automation thing. And now, speaking of Apple stock, which has rallied off its rotation zone lows, but now in a horizontal channel. So in order for me to even be interested in anything to do with Apple stock, it has to get a close above 149 before we're looking at any new run up. Right now it's 147.74. Or if it closes below 142, watch out below. It's got more downside. Then it will violate its weekly rotation zone and also trigger a horizontal channel. So it's got possibilities on both ways for longs and shorts on Apple. And then finally, we talked about StockStream. Remember that, Bob?
Yep.
Which the portfolio is now at 50,807 as we speak. It was up to at one point like 56,000, but with the FANG sell-off, it suffered a little setback. But Cheddar is a new home of crowd-controlled StockStream. It's still on Twitch, but it's going to be moving to Cheddar.
Cheddar is a YouTube up-and-comer who doesn't look like they're even close to being as good as YouTube.
Mm-hmm.
Well, so this trading game, that he do the $50,000 stock portfolio has been acquired by Cheddar. Quote, the Millennial Business News. That's what they call Cheddar. The Millennial Business News. That's not a quote from us. That's from somebody else.
And what that means is Tesla, NVIDIA. That's all that means. That's all they put in the chat.
So StockStream will continue, though its balance will double. So it's going from 50,000 to 100,000, and the portfolio is going to be extended to commodities, industry portfolios, indices, and other asset classes. I bet you cryptos will sneak in.
Right.
Yeah. And Cheddar is available on the web, Sling TV, Amazon, Twitter, Pluto TV, Vimeo, and Facebook. The company claims it's also on 60% of smart TVs in the U.S. So the guy who founded this crowd voting portfolio trading thing is now officially acquired by Cheddar.
It was acquired.
Yeah, it's acquired. It's not just they're going to stream it. They acquired it. The guy who's doing this is also a software developer, so I think they've acquired him too.
There's nothing stopping us from doing this except for time and focus.
What were you saying?
And brains.
No, we can do this. No, technically this is a non-issue.
No, I mean, we have brains.
Oh, yes.
I mean, why anybody?
I'm not going to have people vote what I'm going to buy or sell.
Exactly. I mean, it's just like, it's idiotic.
So people could just watch me going, I think I'll buy this.
I'd rather play Donkey Kong on Twitch than trade stocks on Twitch. To tell the truth.
Maybe people can watch you play Donkey Kong, and when I have a stock trade, it could stream by on your Twitch feed. What is the latest news on crude?
Crude is, so we had two really strong, what I would call bullish numbers. Tuesday afternoon, the API numbers posted big draws. And then Wednesday morning, the EIA posted big draws, multi-million on both. The API didn't have a multi-million gas draw, but that's okay. The API is the less important number. And crude oil subsequently has been up for the last 5 days. It was interesting because we had a test of the 50-day moving average on the 5th, July 5th, or actually it was July 3rd, and then we fell back off of it on the 5th. And we're doing that again right now. We're up against or up near the 50-day, which is around 46.64 or so. And throughout the cutting of production that OPEC has been touting, they raised production. The 14 nations in OPEC ended up producing 340,000 more barrels than they were supposed to. So they defied their own production cut. And it wasn't just cheating. A lot of it was Libya and Nigeria, who have an exemption, but there's probably 70, 80,000 barrels came from somewhere else. And Saudi Arabia surpassed 10 million barrels a day again. Now, they claimed it was technical. That it's a very difficult thing to control to the barrel, and I get that. But I can't imagine them getting up above that 10 million number, which is psychological. It's always been kind of this number, this magical number. Russia's been above it. The U.S. had been above it in the past. And Saudi Arabia, that's always kind of like their magical number. When they're above 10 million, they're pumping full out, supposedly. They've got the capacity to get close to 12 million, Saudi Arabia, when they're pumping full out. But the 10 million is always that psychological level. So there's been a ton of production. But the IEA, which is the International Energy Administration or Association, or whatever the A stands for, but it's the international energy body that's in Paris, France, added 100,000 barrels a day of demand to their 2017 forecast and added a few more 100,000 to their 2018. So they forecast higher demand. And then the last important figure was the U.S. production spiked again. So there were all these combination bullish and bearish sort of data points. And the bullish seems to be winning out right now, but nobody really believes that there's anything driving crude up past that sort of magical 55 level that Saudi Arabia would like to see it. U.S. oil wells continue to get less efficient. So even though there was a spike in production and they're predicting that the U.S. is going to get above 9.5 million, it's probably not going to happen this year because the efficiency of the wells is kind of lower. So price action, what do you think of it, Michael?
We have a major significant level at about 47.05, 47.07 area.
I have it at 06.
Well, okay, split the difference then. 5 or 7. Which one? If 6 it is. Winner, chicken dinner. So what's interesting, though, is if we do get above there, between 47.90 and 49.30 area, there is so much resistance. We have a GAN rotation zone. We have, it's albeit flat, but we have weekly rotation zones and moving averages higher. It's, first of all, got to get a sustained move above that 47.06 level, but then there's just tons of stuff it can run into. We'd have to get back above 50 before I'm interested in crude on the long side at all, because of the choppy price action that it can experience up here.
I wrote a post a couple of weeks ago. Crude likes to be in a range, and that's really what it is. It's in a wide range, 43 to say 48, and it likes being there. So I don't see any big trend developments other than potentially to the downside if the production keeps going like this. Goldman Sachs put out a note that crude oil is going to be in the 30s. Bank Paribas did the same thing. They didn't say the 30s, but they said it's going to go below 42. So 41, I guess, if not the 30s. And Bank of America put out a note that basically said there's going to be more demand than everybody thinks. So 2 of 3 bearish on the notes. But, longer term, it's funny because the longer we stay up in these high 40s, the more production gets pumped out in the U.S. and the more likely they are to spend capital. So I don't know. I don't have an opinion of crude fundamentally because it's actually mixed. We're coming to the end of the summer driving season. So, but the EIA number from this week was significant because it included the July 4th week, which tends to disappoint. If you look back historically, the week of the 4th of July, the estimates, they usually disappoint versus the estimate in terms of crude oil drew at 7.56 million, and it was expected to draw at 2.8. So that would be a beat. The 4th of July week numbers tend to not get estimated very well, but they weren't estimated well, but it was a beat to the draw side, which the opposite usually happens. And there was also a draw from the Strategic Petroleum Reserve of 2.6 million barrels, which got dumped into the market too. So this is a bigger draw number than just the 7 million that's in there. It was 7 million plus the 2.6 from the SPR. So we're coming to the end of the driving season, but these draws are strong. So if this were to continue, which is not likely going into the winter, you could see that $55 mark, but just don't think it's going to continue.
Bob, I have an oil observation I'd like your comment on.
Shoot.
So here it is. About a decade ago, the auto industry was making retro muscle cars, brand new muscle cars, huge horsepower. They're still making them, but back then, they went all gangbusters. And the muscle car sales have dropped off. We're talking 12 miles a gallon, 16 miles a gallon, right? And now the rage is the Chevy Bolt, the Tesla 3, the i3. Nobody even has this muscle car cat. Who cares if you have a Challenger Hellcat? Not me. Yeah, I don't care.
Yeah,
drive itself because you put me behind 700 horsepower and I'll end up in Stafford's garage.
I would love a Challenger Hellcat.
And or the Forest Preserve. But the point is that there is a serenity, a Zen garden to the electric car. And I'm fascinated to find what my pick will be when it goes, when I get to make my pick. I don't want the Tesla because it's actually too big of a car. The 3 looks cool, but you won't get it for a few years. The Bolt looks interesting for a runaround, for an extra vehicle runaround. And UBS just took it all apart, and they found that it's parts bin, it's reliable, and it came in $4,000 cheaper than they thought because the battery prices are going down.
Then you have the revised. I used to own a Leaf, and now you have the revised Leaf coming out in September. With it's supposed to have the 200-mile range now. So, these.
So my question is with the new fad, or not fad, but the interest in electrical vehicles or hybrid vehicles, and the sort of disdain for the retro muscle car, and the fact that OPEC is pumping like mad. Will gas get back to 99 cents a gallon?
It's funny because there's a certain inherent cost in a lot of the supply. So it's not likely because a great deal, the only gasoline that can reach 99 cents is OPEC gasoline. OPEC crude oil distilled into gasoline because they pull a barrel out of the ground for like $10 or $11. So when you distill that all out, that's the only gas that could get to that level price. U.S. crude oil distilled into gasoline cannot. It just can't get that low. They'll stop pumping it. So, but yeah, the demand, Volvo, what they announced, was it this week or last week that Volvo announced that they're essentially going to...
Yeah.
They're going to abandon, right? They say they're going to abandon combustion engines for the most part, right? Over time.
They'll have everything by 2019 will at least be some sort of hybrid.
Yeah, they have to do the hybrid step first because Volvo hasn't even passed petrol yet.
Yeah, so I still love, I would love a Challenger Hellcat. I still love those cars. I never liked the look of Tesla. I thought Tesla did a very, very smart thing. You know, the interview that I did on Monday for BNN that I think we posted, I'm not sure. We could if we wanted to. I talked about buying Tesla as a trade at around 315, letting it get to 326, and then getting out of it. And it got to 327. So in theory, that was a profitable idea. But I said that I'm not going to buy a Tesla. I'm not a fan. When I look at the front of the Tesla Model 3 and I don't see a grille, it weirds me out. It just looks so strange to me. But the more I look at it, the more I like it.
Yeah, no, that'll change.
That my view of it will change, right? Yeah, my perspective of it. When the Model S has a tiny little, at least it's like a faux opening or like a black plate that kind of makes it look like there's a grill there.
No, the Rev B has that flat nose like the Model 3 and the Model X.
It does?
Yeah.
All right, so I don't know if that'll grow on me or not, but right now to me it looks weird. But the more I look at it, the more it's kind of cool. You know, that it's just kind of like this smooth nose. And then I start thinking of the chips I used to get on my cars on the front, get all chipped up from driving it and stuff. But I would rather get into an electric BMW, Mercedes, Volvo, or someone that's got more of an automobile history just because I like cars. You know, Teslas don't do anything for me.
They spent billions on that i3, and it just looks like it's terrible. It looks terrible, in my opinion. It's built amazing.
The little one, right?
The small one, the hatchback, the i3.
Yeah, the big one is awesome.
Yeah, that's, but I'm talking reality here. But if they put that same i3 technology in a 3 Series, they would have sold a ton of them. But I think it's just battery supply. There is a battery problem. Cobalt is one of the problems, and there's some sort of political turmoil where cobalt is. I think lithium, 10 times the lithium to cobalt in the formula. I'm talking off the top of my head, but batteries they're going down in price, but there are political issues with getting those minerals out of the ground.
Yeah, I mean, the i8 is gorgeous, and Stafford says we're talking reality here because it's $155,000. So that's not reality for 99.9% of people. Yeah, but it is beautiful. And, again, this is what Tesla did right to me. It's like the Prius is hideous. That's just hideous. And I don't know why people think electric cars have to look like a freaking walnut, in order to, why did they do that? I guess the shapes of the batteries. I don't know. I guess wind drag because the engines weren't as powerful at first. I don't know. But Tesla did the right thing, man, by coming out with that 2-seat Roadster first and pricing it $100,000 where, you essentially had the wealthy of the world being able to be green. And that was a smart move because it's not only the actual customer satisfaction of the cars for Tesla, which is very high, but it's the image of it. Because the first ones were $100,000, and then the second ones were $100,000. It was 60, 70, whatever the S is.
Yeah, but electrical cars are not green because to make a battery pack for an electrical car is 8 years of CO2 emissions from a gasoline engine.
There you have it.
What's interesting with Tesla, this was fascinating. Tesla's Hong Kong sales gutted by tax change. So after a tax incentive for electric cars was slashed, new registrations of Tesla's vehicles dropped from 2,939 to 0.
What?
So Hong Kong changed their, they got rid of their tax break for electric vehicles on April 1st. So prior to April 1st, so in the first quarter, they had registrations of 3,700 Tesla vehicles, including 2,939 in March, which a lot of people knew about the slash come and say did it, compared to 1,506 vehicles in the entire second half of 2016. Now, once they got rid of their tax incentive there, they've had 0 registrations.
Zero?
Zero. Like, it's like, oh, you're not helping subsidize the car? Sorry, not buying it.
That's telling.
So and they're projected to be, especially this Model 3 rollout, the first manufacturer in the United States to lose the tax incentives in this country, which amounts to $7,500 on the Model 3, which starts at $35,000, and they're going to say nicely equipped at around $42,000. So that tax incentive drops that $42,000. Let's just go off that number, or $42,500 to back to $35,000. whereas you lose that tax incentive, you're essentially losing what's $7,500 to $40,000 on a percentage basis, Mr. Calculator.
20%. It's just under 20.
So, that's sort of a big hit. So it'll be interesting to see what happens in that aspect once they do lose it in this country. But it definitely had an effect in Hong Kong. And that's not the only place, because Denmark, I believe, a few months back changed theirs, and they saw a massive hit also there with people buying new Teslas once the tax incentives were changed for owning a Tesla. So
18.75%. I have a question. If you get a $7,500 tax credit and you owe $7,000 on your taxes, do you get $500 back?
No.
Not how it works. Right? It's just a $7,500 reduction of your gross income.
Correct. So if you were only going to pay like $1,000 in taxes, you could essentially be throwing away $6,500 of the tax credit.
I don't support any of these government money to
I don't either.
Because it just
it's not fair.
Yeah, it's not fair.
But how are you going to sell the solar roof without the tax credit?
That's different. The car thing is getting so mature
now. I don't support tax credits. I was being sarcastic. I don't think the government should be doing solar roofs or solar panels or any, let the market take care of the market.
Yeah, we've won the green energy war. Hooray! Now let's get on with it.
That's always the thing that happens, man. You attack the culture about something and it changes the view of things, and that's how you win.
I would need to know who owns Lay's, because I've got to go buy some.
I think they're for real. They're not bought out, right? They're family owned or something? Chicago?
Lay's. Pepsi. Frito-Lay. Pepsi.
Yeah, Pepsi owns them, like I said.
Oh, I got to run out and buy some Pepsi stock.
Why? What's going on with the flavoring of Frito-Lays?
Because in the food and fashion nook corner, Lay's Potato Chips announces their 4 finalists for Do Us a Flavor contest. Oh, boy. So Lay's brand team jetted around America this week to surprise 4 finalists vying for the 1 million grand prize for Do Us a Flavor contest. Earlier this year, Lay's brand asked fans to submit regionally inspired flavors. And so here are the 4 finalists, and these are people that came up with these flavors and then submitted it. And then the one that's chosen, I guess the person gets $1 million, and then they're going to produce it. But I need to know you guys' picks. So now we have Lay's Wavy West Coast Truffle Fries.
Pretentious.
Lay's Southern Biscuits and Gravy.
We'll try it.
Lay's New York Reuben.
Okay.
And Lay's Kettle Cooked Greektown Euro.
Wow.
I'm going to buy a lot of that.
That is all good.
So those
the truffle fries
finalists.
Yeah, the truffle fries seems like easy. It seems like 1 million people would have sent that one in.
But I'm going for the Greektown Euro.
Oh, I'm biscuits and gravy all day.
Or I could, I got to go. That's got to be a tie-in with the Greektown Midwest Euro.
What's the
biscuits and gravy
content?
All day long? Those biscuits and gravy are going to be in my belly.
So when the self-driving car is driving you around, you're going to be eating your biscuits and gravy chips, so you don't have to put your hands on the wheels. And we have a new segment this week. Things not to do before committing a crime segment. All right. This actually ties in with stocks and everything else. Don't Google how SEC detect unusual trade before insider trading. So the SEC, Securities and Exchange Commission, announced insider trading charges against a research scientist who allegedly searched the internet for how SEC detect unusual trade before making trade that agency flagged as suspicious through data analysis. The net analysis.
God.
So the SEC's complaint alleges that, how do you say FEI? Fei Yang loaded up on stocks and options in advance of 2 corporate acquisitions late last year based on confidential information obtained by his wife. So here's the whole sort of chain of events. On December 6th, he used a foreign account to purchase 164 Stillwater call options. The options were all set to expire on December 16, 2016, only 10 days away. Later that same day, Yang conducted a Google search for the search string, how SEC detect unusual trade, and visited several web pages concerning the Commission's detection and enforcement efforts with respect to insider trading. Then on December 7th, he searched for insider trading with international account. Then by the end of the day, December 8th, Jan had accumulated 695 Stillwater call options. December 9th, at approximately 1:04 a.m., Stillwater and Saban... I can't pronounce anything. Stillwater and... How do you say it?
Sibanye.
Sibanye publicly announced that Stillwater had entered into an agreement with Sibanye under which Sibanye would acquire Stillwater for $18 per share in cash. Jan accessed the press release online at 5:30 a.m. that day. He then visited NASDAQ and Yahoo Finance pages concerning Stillwater between 5:30 and 6:09. Over the course of the day, Jan sold his entire Stillwater options position, generating illegal profits of approximately $109,702. 8 months later, both Jan and his wife, Attorney A, are Googling, why did my Googling not prevent this? Will the DOJ go after me next? And how much is this going to cost? And right now they're facing charges.
Why did my Googling not prevent this?
That's what they subpoenaed his Googling information, his like Google searches, as opposed they first detected the unusual trades as like, why is this guy doing this? It's not normally happen with all these call options right before. This is not normally his pattern of trading. And so they subpoenaed what he was Googling. It's like the trail of evidence is how to not get caught insider trading.
Oh my God, that's unbelievable.
Go to the public library and Google it there, not on your account.
I'd like to see somebody Google how to stop my Google search from finding out that I'm committing a crime.
It's just, that was hysterical. So that sort of ties in with the SEC. Don't do insider trading. It's not worth it, especially if you're a little guy. They seem to bust the little guys more often than anything else. You know,
so ridiculous.
Unless you're Martha Stewart. But what is it really worth $100,000? Like that $100,000's gone, and plus you're going like to jail.
Well, if you owed it to the Yakuza, it might be worth it.
Well, yeah, but you've lost the money still, so.
Now you're safely in jail.
And we haven't talked about this, which she might be going to zero, but going to zero in Fraud Corner is a nice time to Fraud Corner, but it's actually going to zero. Fitbit, which has not actually popped up a little this week. It's hit a low of last week or the week before of $4.90. It's back to $5.65, but now Fitbit faces lawsuits over haptic feedback of a lot of its Fitbit products. Immersion is suing Fitbit in China and the U.S. for allegedly violating multiple patents, 3 in each country, for haptic feedback. Supposedly, devices ranging from Original Flex to the Blaze all borrow Immersion's approach to vibrating the device in response to commands for alerts. Fitbit rebuffed, quote, numerous attempts to strike a licensing deal, Immersion claims, so this is considered its last resort. So they have not announced the damages it's seeking yet, but Fitbit's going to court over a bunch of its devices and this feedback, and if they're found they have to pay, oh boy. That would not be good, along with everything else going on in the wearable industries. Going to zero.
The Apple Watch is the new iPod. It really is the number one seller out there. It is a powerhouse. Fitbit's
I see them continuing to struggle, especially if they have piling on of bad news like this.
They should build a drone.
Would they have good karma or bad karma then?
I'm curious what made them spike this week. I mean, the stock went from, what's up?
I have no idea.
Went from 523 all the way up to, yesterday's close was 569.
And another drone news, GoPro still not doing anywhere. Trading 816. Lots of
stocks.
Lots of fun things in the cryptocurrency world.
Go. I love this stuff.
Oh, you love this stuff now? Well, so did the guy behind Janet Yellen saying buy Bitcoin.
I just love that. I just love that so much.
Classic. So I actually love that. I tweeted it to you. I texted that to you, and you're like, that's not real.
And I'm like, I was actually asking. I'm like, that's not real, is it?
That's real. But that's on the side note. Now, the CFTC took a bold step forward in granting institutional investors access to the Bitcoin market by approving the creation of the first SEF, which is a swap execution facility. Previously, traders who wanted to place bets on Bitcoin derivative markets were forced to operate in the markets that were strictly over-the-counter, but now has issued registration order to LedgerX, granting it status with the CFTC as a swap execution facility in the process of approving Bitcoin options trading. Well, now LedgerX is an institutional trading and clearing platform which has been patiently waiting for full regulatory approval from the CFTC to trade and clear options on Bitcoin. So they've got their first step forward with that.
So who's behind this? Do we know?
What?
LedgerX.
I don't know who's behind LedgerX.
Go ahead.
So that is very fast. And early investors in Ledger Holdings include Google Ventures and Lightspeed Venture Partners.
Yeah, Lightspeed sounds right.
So, yeah, there you go. Now, this is something we have to put out there for public service announcement relating to cryptocurrencies. August 1st is going to be a very big day, and if you're a trader or an investor, we don't know what's going to happen some way with this is Bitcoin, but you might see some major volatility in Bitcoin running up to August 1st. This is based off the Bitcoin Civil War. We've had roughly 2 years of behind-the-scenes bickering between rival factions of computer whizzes who play key roles in keeping Bitcoin's upkeep. So they're looking to adopt 2 competing software updates at the end of the month. Then this has raised the possibility that Bitcoin will be split in 2, which would be an unprecedented event. Now, you did...
Crypto Game of Thrones. It's like Crypto Game of Thrones. I didn't see that.
Then you can't cite it if you didn't see it.
TV show. I just want Bob to laugh.
Winter's coming this Sunday, buddy. Winter is coming. Now, so what this means, both sides have incentives to reach a consensus. However, Bitcoin's lack of a central authority has made a compromise difficult. Even professional traders who followed the disputes, twists, and turns aren't sure how it will all pan out. Their advice is brace for volatility and be ready to act fast once a clear outcome emerges. That's what I'm saying. Be watch for the volatility. This is a high-stakes game of chicken, a former market maker at Citigroup Inc., who now runs BitMEX, Bitcoin derivatives venue in Hong Kong. If you're a trader, there's lots of uncertainty as to what happens. Once there's a definitive signal about what will be done, the price could move very quickly. Now, this is based on the ideological split about Bitcoin's rightful identity. The community has argued whether the cryptocurrency... What?
It's so funny. It's mine.
Well, no, it's actually because Bob's brought this up because we've talked about other, like Ethereum's and some of these other coins. What was that other one I talked about a couple weeks ago that was more institutional based? And that one, see, this is the whole aspect of what they're looking at. Should the cryptocurrency evolve to appeal to mainstream corporations to become more attractive to traditional capital or fortify its position in a libertarian beacon and act more like gold or a payment, should act like more like gold or a payment system? So the way it was originally developed and to protect itself from attacks and cyber attacks, Bitcoin by design caps the amount of information on its network called blockchains. This puts a ceiling on how many transactions it can process. It's called the block size limit. Now, what's happened with its growing popularity and its boosted activity, transaction times and processing fees have soared to record levels this year, curtailing Bitcoin's ability to process payments with the same efficiency like Visa, which means if I want to go into the coffee shop and Bitcoin's having a very high latency problem, I want to pay for my coffee in Bitcoins, it could take like 2 hours for the transaction to go through. Well, meanwhile, what am I going to do? Stand there and wait for my coffee? Whereas I could swipe my Visa or pay with Apple Pay or something and have it, or my Starbucks app and have it instantly. So to address this problem, 2 main schools of thought emerged. The one side of the miners These are, and mostly they're all in China at this point. They're proposing a straightforward increase to the block size limit. The other side is a group called Core, which is a group of developers instrumental in upholding their bug-proof software. They insist that to ease blockchain's traffic jam, some of its data must be managed outside the main network. They claim that this would not only reduce congestion, but also allow other projects, including smart contracts, which is like Ethereum, to be built on top of Bitcoin. But by moving data off the blockchain, some of it effectively diminishes the influence of miners, the majority who are based in China, and who invested millions on giant server farms. So the miners are up against the core group. So we're really getting, we have the SegWit technology, and we have SegWit 2x, which implements a SegWit technology and doubles the block size, but they're arguing, and what could happen is some people might implement one technology on August 1st, some might implement another, which means essentially there becomes two versions of Bitcoin at that moment.
I have a question. Mike, did you read the same article that said that retailers that were taking Bitcoin now are no longer taking Bitcoin because they found it was impossible to leverage? And two, how is the Franklin Mint coins doing?
Well, I would not know about the Franklin Mint coins, but I have been reading a lot on, yes, more and more retailers have stopped. There was an initial big rush of people to take Bitcoin transactions, but more and more retailers are now shying away from it because you have this settlement time and everything. It's not a feasible way to do a transaction unless it's something like that I don't expect delivery right away. Like, let's say I order something over the internet with Bitcoin and they're not going to ship it for like 24 hours or something, fine, because the settlement can take place. But if I'm walking into anywhere and want to purchase something at the point of sale, then it's not becoming an actually viable transaction method. And this is part of the argument behind it. So there are two groups of thought, and there's no hardcore decision made. So maybe they will all get on board with one or the other. At this point, this core group is pretty hardcore, no pun intended, with wanting to maintain the core aspect of Bitcoin versus the miners who just want to double the size of the blockchain.
Is all this being done in a communist country?
Well, you have most of the miners are in China at this point because of the way they can get the power necessary to run all these server farms. Because now it takes so long to mine and so much horsepower to mine each Bitcoin. It's cost prohibitive a lot of times in this country, even if you can afford all the servers and everything else. It costs more in electricity than you get for mining the Bitcoin. That's why a lot of the miners are over in China right now.
We need to set up a crypto lab next to the Hoover Dam.
Oh, well, unless it was government subsidized, it wouldn't really work, so
I have a long extension cord.
So keep that on your date on your radar screen for August 1st. And if you're heavily either trading or investing in Bitcoin, you might want to keep tabs on what's going on with this potential split. You can always Google the SEGWIT SegWit or SegWit 2x, and you'll get a lot of information on it. I just want to put that out there.
Yeah, that's a lot of good info.
Finally, in our final Bitcoin news, the trial in Tokyo just started for former chief of collapsed Bitcoin exchange Mt. Gox. The prosecutors in Tokyo say Mark Karpeles wrongfully spent $3 million of customers' money on personal use, which he denies. This is based off of about 3 years ago, the Bitcoin exchange, largest one in the world, Mt. Gox, collapsed. It was blamed on hackers. They lost about, they lost 750,000 Bitcoins held by customers, as well as 100,000 Bitcoins of Mt. Gox's own Bitcoins. They say were stolen by hackers. Together, the lost virtual currency was then valued at some $500 million, although the exchange later said it had discovered 200,000 of missing Bitcoins, but a lot of people just sort of lost all their investment, which is also why you should not put all your Bitcoins in one exchange or anything else. You should spread it out over multiple, because they're not the only exchange to have a problem. Now, based off, there's about 750,000 Bitcoins all missing, but they're only charging him with about 3 million of customers' money, and those Bitcoins were valued way more than that. He has essentially spent it on, they saying he spent it for his personal use in a really nice bed. I read that somewhere. I don't know how you...
What?
A bed. But we're trying to see... Now, he's agreed he was willing to cooperate with the trustee handling Mt. Gox's bankruptcy and authorities trying to locate the Bitcoins. He's like, I'll help you guys, but we're going to see it with all coming out in the trial, whether it was really hackers, whether they're claiming he embezzled it and they can't find the Bitcoins. So this is going to be something else to follow that's sort of interesting, but this is why we say it's also somewhat the Wild West of Bitcoin, meaning you have to really, your funds aren't in a secured brokerage account.
Yeah, so just to add to Mike's comments, because I really, really want to start adding to the Bitcoin segment, or the cryptocurrency segment. First, I should start calling it crypto instead of Bitcoin. When Mike is talking about the dangers, it's behind the scenes danger that you actually face in traditional trading as well. And people who had money with like Peregrine Financial would know that. That was a embezzlement / Ponzi scheme in the futures industry. But so Mike is talking about sort of the undefined risk of the people who are handling your money when you're involved in trading. And what we used to be able to do in the traditional markets, especially on the future side, is we would keep as little money as possible in our accounts. And that's probably something a lot of people should do as well. He's not talking about these things being more dangerous to trade, which they're not. They're actually, I find them very entertaining, and traditional patterns that Mike and I have used and taught for years, we are now applying to cryptos. And we've got a bunch of Path Chats, the Path Educational series that we've done exclusively on cryptos, showing a lot of these patterns and showing a lot of these tips. And Mike spells them out step by step. So if it's something you're interested in seeing, how like traditional time-tested patterns that, again, Mike and I both use in traditional markets apply to cryptos, check out those videos, because we've got, 12, 13 of them up there now that are strictly cryptocurrencies. They're separate from the trading Path Chats that we do for other things. They're educational series. They're meant to be educational. But Mike does use current cryptos and current crypto pricing to show you how things work out, so you can actually look back at your own platforms if it's something you look at. Cryptos are great to trade. They have great price action to them.
We're in the U.S. economy segment now. Lots of numbers coming out, and lots from the Fed this week. So we'll get some thoughts on those from Bob. But first, producer price index came in 2.0 year over year, expected 1.9, and last was 2.4. Core PPI, however, came in 0.1% month over month versus expectations of 0.2%, and last was 0.3%. That's producer price index as a PPI. Consumer price index came in at 0 versus expectations of 0.1%, which was a fourth miss in a row on consumer price index. Retail sales minus 0.2% versus expectations of positive 0.2%. Last was minus 0.3%, so retail sales missed. Now retail sales ex auto and gas down minus 0.1% versus expectations of positive 0.4%. So we're missing on retail sales, and it looks like consumer pricing is this will tie in with our Fed segment, but that's missing to the downside. Industrial production, however, up 0.4% versus expectations of 0.3%, prior revised up to 0.1%. As of a couple days ago, the GDP Now model for the second quarter GDP growth is 2.6%, down from 2.7% on July 6th, although there should be another one coming out today. Coming out earlier today, University of Michigan consumer confidence came in at 93.1 versus expectations of 95%. And what was interesting from their commentary on it, quote, the recent data follows the same pattern repeatedly recorded around past cyclical peaks. I thought that was sort of interesting in the commentary. Now, we have lots of Fed speak this week. Brainerd was talking, it's appropriate soon to start shrinking the Fed's balance sheet, which they've been repeatedly saying. And that he also stressed that asset valuations do look a bit stressed. He said asset valuations historically aren't, quote, way out of line, but elevated, I would say, relative to historical averages. Normally, stretched valuations in themselves are something that you would monitor, she said. Volatility has been exceptionally low, both realized and implied, and that's something that also I've been sort of looking at, and I think trying to better understand what the underlying dynamics are there. So valuations are slightly stretched, and there's very little implied or real volatility in the markets. And now they're trying to understand that.
Yeah.
Yeah. Oh, by the way, VIX 982.
Retail sales is a funny number because retail sales almost always gets revised higher. I mean, you go back and look at retail sales and it comes out and then it gets revised higher. You would think they would get better at the estimates, but it's still, they just miss. It's like if you got an estimate of retail sales at 0.4, you should probably lower it because it's going to come in low and then get revised to your number anyway. Yeah, the Fed speak has been by the book, man. It's been absolutely by the book. Yellen's speech by the book, just, data dependent, gradual rate incree's, blah, blah, blah.
She seemed more dovish this week.
I think she leans dovish. I just should think she hadn't spoken. It's like, to me, it's just every time she speaks, I hear dove.
Well, again, she was talking about shrinking the balance sheet, additional gradual rate hikes needed in the next few years. Inflation response to the economy is a key uncertainty, and rates won't have to rise much further to get to neutral.
That's an interesting thing that a lot of central bankers have started to employ, where so Draghi did it, right? A couple of weeks ago, he said, and I'm going to paraphrase because I don't remember the quote and I don't feel like pulling it up. He basically said that we're going to have to raise rates as the economy grows. And then they came around like a day later because the markets reacted to that. They came around like a day later saying that what he was saying is to keep the same level of accommodation, you have to raise rates with the economy. Because if you don't, then it becomes more accommodative than you want it to be. So they talk about keeping the same level of accommodation while raising rates. And it just seems like wordplay to me because that's obvious. We've always done that. Every Fed that's manipulated rates has done that. That as inflation rises and the economy grows, they raise rates, but they don't say, yeah, we're still accommodative. We're just raising rates to stay at the same level of accommodation, not become more accommodative while the economy is getting stronger. So in other words, tightening while the economy is getting stronger. It's just a prettier way of saying it. The central bankers are extremely scared of shocking the asset markets. That's not supposed to be the job of a central banker.
Some stuff from her live testimony, because there was prepared remarks that were released, and she did live testimony and answered questions. This is a quote from her. The longer run neutral level of the federal funds rate is likely to remain below levels that prevailed in previous decades. That was an interesting direct quote. Another one that caught me was, quote, I see roughly equal odds that the U.S. economy's performance will be somewhat stronger or somewhat less strong than we currently project. It's 50-50 whether it's getting better or worse. And then she stressed, quote, let me state in the strongest possible terms, notice how I said stressed, that I agree the U.S. federal debt trend is unsustainable, may hurt productivity and living standards for Americans. She was big on the sustainable debt kick of this country. So she felt necessary to really stress that. What else? Oh, then we had Kaplan talking this morning. We're already starting to see wage growth for higher skilled workers. Employment in America is getting very close to full employment. This is an interesting one, something you've alluded to. Businesses have far less pricing power than any time in my lifetime. Aren't we in that Groupon society where it's got to be discounted? Like
everything has to be discounted.
Yep, and he then went on to say what evidence of inflation, he wants evidence of inflation progress before hiking again, so he wants to see inflation coming in, which is not being reflected in the numbers that you already talked about, and he's not in support of raising the Fed's inflation target.
Good for him.
Good for him.
Yellen said that's off the table, so.
And we just had, coming out a minute ago, Goldman cuts the second quarter GDP estimate from 1.9 to from 2.0. So they got 1.9% for Q2 GDP. Weren't people originally calling for stuff in the fours?
Yeah.
And now we're because the first quarter was, that's going to be fixed by the second quarter. And now the second quarter keeps going lower. Do you have any currency or international stuff going on?
The only thing that I noticed in the currency markets that I thought was a little newsworthy was the dollar weakness. So everything in FX trades in pairs, obviously, one versus the other, and most things trade their highest volume against the dollar. And the sterling has been rallying against the dollar. It's been kind of in a flat uptrend since, let's say, January 20th or so. And it really looks like it's gotten recent strength against the dollar, but it's been very weak against the euro. The sterling got to its lowest value against the euro for 2017 on Wednesday. It was its cheapest against the euro. And it's interesting because what we're starting to see and what the people of the UK are going to slowly start to feel is the effects of Brexit that nobody really knew when they voted 52% to 48% to exit the EU on, when was that, June 23rd, I think, of last year. When that happened, it was very much a patriotism nationalist thing, even though the vote was pretty evenly split. But there were just all these unforeseen things. So the first one that's kind of come to a head is this quote-unquote divorce payment that supposedly the UK owes the EU. They finally admitted in writing yesterday for the first time that they do owe something. And there's some talk that it's around, that the bill is actually around 100 billion euros. So what, about $114 million, or $1 billion rather? So that's where they put the bill now, and they have to adjust that. That's not chump change for an economy the small size of the UK's. Obviously, it's a big economy for a small country, but versus like the US and China and the EU and Japan, it's a small economy. So that's a lot of money. So this puts the Bank of England in a really precarious spot because the UK also has one of the higher year-on-year developed economy CPI prints. They were 2.9% a year over year. And compare that to the US, which is all the way down like 1.3 year over year, or 1.6 for the EU. So the Bank of England kind of needs to start raising rates to curb inflation, but they also cannot have their economy go into a tailspin because they don't know what's going to happen with Brexit. So this has the possibility for a ton of volatility in the sterling, especially versus the euro, but versus the dollar as well if the Fed starts to tighten now starts to accelerate the tightening monetary policy. Now, based on today's CPI, you probably won't see that. But, when you look at the talk is still, everyone's still talking as if rate hikes are appropriate. Balance sheet trimming is going to begin this year, so on and so forth. Even Kaplan, we're already starting to see wage growth for higher skilled workers. The Fed officials here still seem to be talking like the US dollar is going to go higher. So if the sterling starts falling against the dollar and is falling against the euro at the same time, that could be a pretty big pounding for the pound. That's the most interesting thing I found. A pounding for the pound potentially coming. Charts still look bullish, sterling US dollar. Charts still look strong, but we'll see.
Fantastic. So do you have a why this week?
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
So my why for the week involves cryptos, because I want to get more involved with our conversations about cryptocurrency. And I'm probably like a lot of people out there who've heard of these crazy cryptos, and it's like, I don't trust the internet kind of a thing. But what I've been noticing, and what Mike and Stafford as well kind of been showing me, is that they are real. They have real volume. And what I've seen is that they're extremely tradable, and they behave in a very, very price action based technical fashion. I think because there's no institutional hedging going on yet. So there's nothing, hedgers tend to not be price sensitive. So it doesn't really matter to them where the price is. When they do their deal, they need to get their hedge done. And that's that. And that causes a lot of price action that we do in traditional markets to go sour. It's because something happens out there in the market that can't really be predicted or foreseen. So cryptocurrencies need to be looked at the same way that traditional markets are. Mike had sent me a picture of a guy holding up a buy Bitcoin sign behind Janet Yellen, and the guy looks 12. I mean, he really does. At least the guy in the background that I see. I can't really see the guy holding up the sign, but they literally look 12 years old. So what you have in cryptocurrency, in the active trading cryptocurrency markets now, is a lot of inexperience in trading a vehicle that's actually very tradable. So my why this week is, why wouldn't you learn trading and then apply it to a market that's actually behaving the way that the traditional markets have behaved for 100 years in terms of price action? Price action is just human nature. Okay, it's just humans feeling an emotion and acting on it. Humans having a need to get things done. When you look at some of our patterns follow this sort of human emotion. I'm long. It's going down. Should I sell it? No, I'll buy more. Okay, now it's holding up. Now, wait, it's still going down. I'm going to sell it. And then the accelerated selling happens. That is reflected visually in price action. And that's what we're trading. We're trading human emotion. And it's more rampant in Bitcoin and in Litecoin and in Ethereum and in cryptocurrencies in general than I've seen in a long time. Last time I saw markets this tradable was when retail got involved in FX a while back. And FX has always had this institutional side to it. It was created by institution to institution trading. So it still wasn't even as good as the FX markets were years ago and still are today. So from a perspective of what trades based on price action, I go cryptocurrencies number 1, currencies number 2, futures number 3, and the stock market number 4, and I still trade price action in the stock market. So if you're interested in cryptocurrencies, learn price action. That's my why.
Remember a while ago, we did a Chipotle trade?
Yep.
But it took a while to manifest. It looks like we might have a Twitter trade. Speaking of price action on a weekly basis, it looks like it's put in a very strong bottoming formation. Mm-hmm. We need a close on a weekly basis above 1979. Right now we are trading 1972. If that triggers, we have the first target is 2079, second target 2378, third target 2525.
Nice.
So that's waited for a long time. It put in a higher low back in April on a weekly basis versus last May's. This is May of 16's low of 1373. So I've been following this and stalking this for a long time, but it looks like it might finally trigger a potential trade. And then if it gets above the 25-25 level, then it could easily make a run back to about the 31 level. So for people looking to invest in Twitter versus just trade Twitter. So that's what I'm going to be watching for this week.
What is going to happen to Twitter?
I don't know.
I saw some what do you call it? Newscaster person on a specific news channel quit Twitter this week and wrote this whole dramatic letter to Twitter, as newscasters tend to be dramatic these days. And she wrote this big dramatic letter of how she's breaking up with Twitter because Twitter changed and Twitter became mean. I don't know what's going to happen to Twitter. I think Twitter is definitely viewed as a place where you can anonymously be mean, and everybody else is like journalists talking to journalists. Just regular people just don't seem to care about Twitter. And I'll keep wondering what's going to happen to it.
Twitter is going to turn into a corporate marketing tool. And people who use it as a personal expression rather than going to a therapist will realize that that's a dumb place to be.
Well, I have nothing else.
I got nothing else. Thanks for listening again, guys. I'm Bob Iacchino.
And I'm Mike Arnold.
Along with Stafford, we will talk to you guys next week.